What's going on, family? It's your boy Justin. Super excited to be here in today's video. Today's video, I want to show you how I made a little bit over $8,000 trading US oil. For those of you that are new to the channel, what we like to do is we like to do these breakdown videos of trades that we shared, whether it was in our free community or whether it was in our paid community or whether it was in our school community, whatever it might be, right? So that being said, I don't want to take up too much time in the intro today. All I really want to do is I want to break down the setup. I'm going to show you guys the results of the setup. I want to explain the before and the after, and I want to explain the thought process and really walk you through how I approach the market and how I'm taking these specific setups. But with that being said, guys, what I'm going to do is I'm going to go ahead and pull up the chart. So this was that specific setup on oil. Now what I'm going to do is I'm going to go ahead and delete everything on the chart. I'm going to go ahead and put on the replay tool, and I'll have the editor put up some screenshots of the trades before, after, XYZ, blah, blah, blah. Just screenshots somewhere on the screen. So when it comes down to it, this is how I was interpreting the market. I seen the market make a series of moves, and this is how I interpreted it. So step one was, we're going lower. We've been in a very bearish market. We're making swing highs and swing lows and lower highs and lower lows and lower highs and lower lows and so on and so forth and so on and so forth, right? Now, this here is the lowest low, right? Now, that low was technically put in by this high. Now, the reason why, in my opinion, this high has relevancy is because this is the high that made the big move to the downside, right? You can say, oh, well, technically, this is the lower low that made this lower high that created the push 100%, but for some reason, the market pulled back, probably to mitigate something, do whatever, but this was the wick to the upside that made the big move to the downside. So for me, this is my relevant range. Now, when I started to look at oil, the first thing I noticed was, all right, price made that big move down, it came back, and then boom, it made a break of structure. Now, for some of you, you might say, hey, how do I know this is really a break of structure? How do I know this isn't just a liquidity grab? And you're 100% valid with that questioning. Now, what I want you guys to understand is, in regards to it, if you're trading in a range, so example, this is our range, it doesn't matter what happens in between this range, right? It could look like this, it could look like this. We have to assume that the market's gonna continue down up until we have some type of break of structure, which even if it's not a closure, it's still a break of structure, right? Now, when that happens, price creates a new range from that swing low to the new swing high. So what happens in that range? Doesn't matter how it looks or what it looks like, whatever, as long as it doesn't break the low, we have to assume that it's going higher, right? So now that we have that thought process in mind, now we can talk about this and have an educated conversation. Now, when I saw this, in my mind, this told me that this was a BOS, break of structure, change of character, whatever you want to say. Everybody's got a different name for everything nowadays. It doesn't matter to me what you call it. Now, this was the swing low that created this new swing high. So in my thought process, this is my structural range. It doesn't matter that it did this and then it made a higher low, because technically you could have thought, hey, this is a lower high and it failed to make a lower low, right? That's your first indication of maybe things are switching directions. Now, let's continue. Now that I understand that this was the overall range I was trading in, let me make my mouse a little faster. Now that I understand that that was the trading range that I was trading in, what I want to understand is, all right, now we want to see if price can pull back. Now, it doesn't matter how deep we pull back. Reminder, it does not matter how deep we pull back as long as we keep our structural areas intact. So here's my old lower low, which is now my new relative low, and here's my new higher high, right? Perfect. Now, as price pulls back, the thing that I really liked about this was we made a liquidity grab and we failed to go lower. So what does that mean? It means something down here was mitigated. Did we trade this? No, sir, we did not trade this. Price went up, pulled back, price went up, pulled back. Series of mitigations going on, right? And then we went higher. We had a little minor internal break of structure. And then this is where I started focusing on this bad boy. When I started to see price now, I started to zoom in and I started to ask myself questions. I said, right? Sometimes you gotta step back from the charts and just ask yourself questions. You gotta ask yourself, okay, where do I wanna buy? Do I wanna buy discounts? Do I wanna buy premiums? Do I wanna buy in the fib? Do I wanna buy this? Am I looking for selling opportunities? You gotta first figure out in your mind what you're looking at, right? If you don't know how to do that, you need to learn how to approach the market, right? One of the biggest things I do in our community is I teach people how to approach the market. Now, with my approach, what my approach told me was, hey, we're giving signs that the market is going bullish. Perfect. So, with that being said, where are we currently in the structure? Perfect. When price was looking like this, I said, cool, this is where we're at currently in the structure. This is my relative low. I'll change the color to something else. We'll do blue. This is my relative high. That is the structural range in the sense of where I'm looking to focus in on in the market. Nothing else matters right now besides what's in between this box. The only things that matter to me right now is what's in the box, right? Structural range. It's the only thing that matters is what's in this box. So when I'm looking at my box, I'm like, all right, well, let me throw a fib on this. I can see fibs at this point in my career without having to draw it, you know, but I do this just so you guys can have some understanding. So my thought process is, okay, here's my range of the 61, 71, 78, 88, 6 area, right? So here's another box. Click this. Here's another box. So in regards to this box, whoops, I clicked the wrong one. Here's another box. Now what I'm gonna do is I'm gonna take this box, I'm gonna look over here. What do I find? I find an institutional sponsorship candle. I find a specific area, specific candle of interest, and what am I doing? I'm going to measure out said candle. By measuring out said candle, I now have an area of interest of where I want to look to take an opportunity. Where's my area of interest? Pretty much right here, right? Anywhere from the 0 to the 50 of that candle, right? So where's my target? In the sense of a setup like this, my target is right at the high, and the reason why is just because you're able to not only maximize your risk to reward, but setups like this, you can put the stop right at the low, and you can target the high. You get a decent risk to reward. This trade ended up going to the overall -27, whatever it was. But these are trades where you can get really good risk to reward setups without having to really risk too much on your account. So let's see what happens. Price comes down, boom, it wicks us in, it reacts off the 50%, the equilibrium of that candle, then we slowly start to take off, right? Have a slight little pullback. That's just to shake out the weak-handed buyers, and then boom, our TP is hit, and our trade is done and dusted, right? Boom, trade is done and dusted. And then, we had another pullback, but then eventually, if you guys have been watching, we always like to take trades to the -27. That would have been almost a 7R, which is amazing, but at the end of the day, we don't need to be greedy, so we cashed out right there at the high for about 150 plus pips. You calculate, depending on your broker, you might calculate oil and points or pips. It doesn't necessarily matter, but man, this was a phenomenal trade. We were able to make some phenomenal cheese on it. So guys, I hope you enjoyed this little quick one. right? I'm gonna start making these quick little videos for y'all a little bit more often. But that was a setup that we took. If you wanna be able to take setups like these or just have a good understanding of how to approach a market in this way, all you gotta do is just tap in with us, right? Whether you wanna learn, you can join the school community, or whether you just wanna take signals. In the next coming days, I'll drop it in the chat, or I'll drop it in the description. But as long as you fund up with our recommended broker, we're gonna open up a free signals chat for anybody who wants to participate in taking free signals. With that being said, guys, hope you liked the video. Leave a comment, subscribe, and I'll see you guys in the next one.